Residential sales comparison and income approaches, page 206. Let's look first at an example of positive leasehold. Therefore, the value of the leasehold interest is $16,500. The rent of $1,350 per month. The appraiser selects a GRM of 110 to the appraiser determines that the property should have a market. For example, a property has a contract rent of $1,200 per month. To illustrate negative leasehold, the following example would, for example, a property has a contract rent of $1,500 per month. The appraiser determines that the property should have a market rent of $1,250 per month. The appraiser selects a GRM of 95 to be stated as a negative. Since a negative leasehold is created, be appropriate in the assignment. $1,350 by 110 equals $148,500. $1,200 by 110 equals $132,000. $148,500 minus $132,000 equals $16,500. Amount of the advantage to the lessee. In dollar, apply appropriate in the assignment. $1,250 by 95 equals $118,750. $1,500 by 95 equals $142,500. $118,750 minus $142,500 equals minus $23,750. Therefore, the value of the leased fee interest is $23.750. Amount of the advantage to the lessor, in dollars. A common question at this point might be about what happens when the contract rent is equal to market rent. Theoretically, there would be no leasehold or leased fee interest. However, the appraiser needs to be very careful of making the assumption that the parties to the lease would remain in this position for the remainder of the lease in all cases. This is where the discussion becomes more complex and misleading results could occur if the conclusions of the analysis are not interpreted correctly. Assuming that rents are expected to rise during a lease period, if the lease is long-term and there are no provisions for the rent to be adjusted upward, contract rent and market rent will not always remain the same as time goes on. In such case, a more complex analysis and/or technique must be used, which is beyond the scope of this course, but discussed in more advanced coursework. Easements 206. An easement is a right to use some part of another person's REIT property for a particular purpose. An easement is irrevocable and creates an interest in the property.